What is going on, Alpha Hunters? The markets are closed for the week of July the 26th, and hopefully you had a great week. Let's talk about what went on this week, as we did get a little bit of a gap up, roughly 0.8%. And if you kind of remember out of last week, the idea kind of coming into the week, or at least my ideas, was I was looking for probably the retest bullish trade up until like the daily moving averages as they were coming down, right? We had some pretty good breakdowns last week, so it kind of made sense to see a little bit of a retest. But after we got that gap up on Monday, due to it being like about 0.85%, when we were on the live stream on Monday, I just kind of like, yeah, I feel like that was probably a good majority of it because there wasn't much room between where we gapped to on Monday and where we were going to for the daily moving averages. So I didn't feel like there was enough room of a play, and unless you were snagging it Friday at on the close or a little bit shortly after the close there on Friday, there wasn't much of a play higher. So we did trade a little bit higher there Monday into close, Tuesday kind of mid morning, and then we kind of just stopped as we kind of got into the daily moving averages as they were kind of coming down. We kind of just stopped going bullish, just kind of chopped around, slowly kind of faded throughout the day. Ended on the session lows, broke the morning low right there towards the end of the day, the last 30 minutes there on Tuesday. So that was kind of what we were talking about at the end of last week, was looking for probably the bounce play into the moving averages as they're coming down, and maybe looking for that bearish play there. That was looking pretty good, especially with how we closed Tuesday. Maybe you weren't wanting to be aggressive at the highs, as we definitely mid-morning had a pretty strong 30-minute 15 minute, 20-minute pop there. And, it's like, okay, let me see what happens. And, we kind of wind up fading, get down to the lows of the day. After seeing that, it was like, yeah, okay, that was probably a pretty good spot to be looking to be bearish. And then, sure enough, Wednesday morning, we got TSLA and Alphabet earnings Tuesday after the bell. Gap down, and just traded down the whole day. Just absolute massive, nasty gap down. It's more nasty there on the Qs. But yeah, just kind of traded down mid morning, a little bit of a pop, or going into midday, a little bit of a bounce, and it just rolled over all the way into the close. Yeah, that's pretty much how it went. Thursday continued on the start of the day. First 45 minutes, pretty strong drop off there. The Qs was down like over 1% in the first 45 minutes, and that was on a flat open. So yeah, that was kind of a rough day there on the Qs. And then just out of nowhere, just bounce hard. City made perfect sense. The Qs basically hit right into the 100 daily moving average. So the SPY hasn't gotten there. So we bounced pretty hard there. And then I thought kind of with that bounce there, I was like, I'd be surprised if we go much higher. But wasn't really expecting the massive rollover we had going all the way into close. We rolled over pretty hard, pretty much all the way back down to the daily lows there on Thursday. We tried to bounce here in the last hour, but then the last 30 minutes just kind of just rolled over from there, and it was kind of a brutal day. And that second half of the day on Thursday kind of tells me that the market doesn't really want to be bullish. Okay, and I mean that's kind of obvious, right? But the thing that I'm going to be looking for, we can talk about that a little bit later, but is probably just some consolidation here before we go lower. We can talk a little bit more about that, the game plan. Friday, gap up, nice sideways action for their about first hour and a half, and then nice little run in the middle part of the day. Then we kind of just faded back down as we kind of went to the close last couple of hours there. So that was kind of the way it went. We do have, one of those big tech companies drop some pretty important news. To me, it's kind of important. I think that's one thing that you're going to start to really see in a lot of the other big tech companies. We'll talk about that here in just a second. All right, let's take a look at sector rotation for the week. Yeah, we see some pretty good price action to start the week. I mean, it was tech. Tech bounced pretty hard, and then you see Wednesday, tech just dropped off. You can see Tuesday, roughly end of day, looking pretty good. By Thursday, 45 minutes into the trading day, I mean, it was at the lower end of the week. So pretty good move there on Wednesday to get to that low point there on Thursday morning. And then, but they didn't end at the lows. Actually, the XLK wound up bouncing pretty good there on Thursday. That run that the market did have, the XLK did pretty good. Discretionaries actually ended at the lower end, mostly because TSLA obviously got hit pretty good there on earnings. And then tech and then communications also underperforming pretty good. So the big tech areas are the ones that got hit the most this week. Energies outperformed. Staples, real estate, industrials, financials, materials, healthcare, and utilities all outperformed on the week. All right, taking a look at Alphabet here, and the reason why I'm going to talk about Alphabet mostly has to do with what they kind of mentioned on their earnings report, or Tuesday after the bell they had their earnings, right? So obviously they gave their quarterly update, and the CEO kind of mentioned something that we're going to talk about here in a second. But you can kind of see where we got to right at the 100 moving average there on Friday. A little bit of a lower wick. I wouldn't doubt it if we see some buying action coming in sometime soon. I guess the question would be, what happens at that point in time? Do we want to rolling over to lower levels? That's a good bet. But this article from Finance Yahoo, Alphabet's earnings set the stage for Tech AI's question. And the big one here that I'm going to kind of go over is this article, not just in this article, but this paragraph right here. So, because I think it mentions something that we've been talking about on this channel for a while, and we finally have heard one of the big tech companies say it. So far, Alphabet says it's seen an uptick in cloud revenue, with some of that coming from interest in AI products. But CEO Sundar sidestepped a more direct question about when analysts can expect to start seeing a return on capital investments related to AI, saying that the spending is necessary for a long-term bet like AI, and adding that in situations like this, it's better to overinvest rather than underinvest and fall behind. This, especially the second half here, is really something that we've been talking about for a little bit here. Months, even going back like a year, is they have to spend the amount of money that they're spending on AI. They have to spend that. And the thing is people think they know how much AI costs, but AI is about to get a lot more expensive, and I think the market's about to wake up to that, okay? But right here, he mentions better to overinvest rather than underinvest and fall behind. This is basically like Blockbuster, right? You didn't invest into the future, into the infrastructure, therefore, over the next like 10, 15 years, you got left behind. You don't want to, all the tech companies know that story, right? They don't ever want to be in that situation before. They don't want to fall behind. So they have to invest, right? They have to invest, and they are having a hard time increasing revenue more than really what they're increasing their capital expenditures. Now, as far as the next kind of domino to fall, and you've already seen this in some of the utility areas, energy areas, you've seen a lot of investment into certain areas like that, certain energy demand areas. The really important thing, this is a Goldman Sachs article kind of report here, is understanding how much the energy market is probably going to change. And you see just how much you're seeing energy demand here. And this is over the past like 4 years, past 8 years, but really just talking about the past 4 years here, that the energy's been going higher, and how much, computation, that's the black line here. But what's really kind of important is we are reaching a kind of cap on how much energy production infrastructure we kind of already have, and we need a lot more of it, right? They keep building data centers a whole lot faster than what we keep building power generation for. So that's going to start to be the issue, because once they kind of cap out the energy sector and utility sector, then obviously they need to kind of build their own, right? And we've already started seeing that, where there's been a lot of reports of Microsoft, Amazon, Meta, Alphabet even saying that they're looking into building their own kind of nuclear power plants or energy sources to provide power to their data centers because, well, they need more of the power. And when you're talking about how much is AI costing, you need to now factor in not just how much the chips cost, but now the infrastructure for energy, like maybe nuclear power plants, and the fuel for whatever the energy source is. So, this is not just talking about how much it costs for AI, because the hardware side, that's easy to kind of understand. I mean, you take NVIDIA's chips and you kind of how much are they charging for their chips, and you multiply by however many you're buying, right? But now, once you get into the part where, oh, we also need to factor in how much energy we're going to need to make sure our data centers are fully energized and working efficiently, now we're going to get into a much larger expense for AI that many of these big tech companies that are building out the infrastructure for it are going to have to pay for. So the true cost of AI is about to go a lot higher, and that's the thing we're probably going to be seeing and talking about here over the next probably year to year and a half. And really, we've already seen it, but I think it's just going to be next level for how much growth that they are doing in these AI data centers because we are about to hit those energy constraints. All right, let's just continue right on. Take a look at the VIX. VIX had a nice little move this week. Tried to pull back to start the week. Actually, did pull back to start the week. Then we had the nice little bounce there on Wednesday, even a little bit higher there on Thursday, Friday. Nice little pullback. We'll see if that was kind of the top that we kind of put in. Be kind of interested to see how the market kind of sets up here also going forward. The DXY. Last week kind of talked about if we see some sideways consolidation, I like the bullish play here to kind of pop through these moving averages. And with how many lower wicks we've kind of had coming in here over the past 4 or 5 days, I kind of dig it. You definitely could have been playing that play on Monday and looking pretty good there on Tuesday, especially that continuation higher than Wednesday kind of freaked you out, that little lower move there. You're like, ooh, man, maybe it's going to roll back over, kind of faked you into a trade and it's going to roll over. But that lower wick that came in and then the lower wick on Thursday looks pretty good. I kind of like it. I think you'd probably just have a stop loss below these two lows or maybe even below Thursday's low. But I think we'll probably pop out of here on a nice little bullish move. All right, take a look at the GLD Gold Trust. Pretty good pullbacks this week. Kind of surprised how much we pulled back on Thursday, but I'd still just rather be bullish on any kind of pullbacks. So, yeah, I'd still just be bullish on any pullbacks. 10-year yield. Well, it rolled over pretty good there Friday. I kind of was liking the lower wicks that we had coming in there on Wednesday, Thursday. Friday, though, yeah, that little lower close kind of says yields are going lower. If you want to take a look at the shorter term yields, like the 2 years just been absolutely getting hammered here in the month of July. Oh my gosh, I'm just dropping off pretty hard there. And the longer term though, take a look at the 30-year, not as bad. I mean, this thing could actually be consolidating, maybe does pop higher here, maybe in the month of August, September, something like that. I don't know. I do like how it's consolidating here. It hasn't really broken this low down from kind of mid-June, so I kind of dig it. But all that to say, and this is what happens when you get to that 10-2 inversion, you see this huge climb. A lot of that is, well, the 2 years dropping off so hard here in the month of July. So the interesting move that we did have this week was we did get above this high that we put in back in January. So we did hit yearly highs on the 10-2 inversion, but we did not take out this high from October. So we're kind of up in that ballpark area. Be curious to see how we kind of set up on this here over the next week or two, but maybe we are finally moving back toward the non-inverted area. If that happens, it's typically when we see some bigger bearishness on the stock market historically. So we'll see. HYG, high yield corporate bonds, looking pretty good this week. I was definitely digging the consolidation that we were getting. I mean, definitely holding above the 10 EMA. I like it. I mean, it looks pretty good, bullish. Yeah. Other than that, I think it looks pretty good. LQD, nice little gap up there on Friday, getting back above the 10 and 2. Take a look at the LQD here. Looking pretty good. Getting back above the 10 and 20 moving averages here. So yeah, I mean, I'd be curious to see how this and the TLT do, but at least we're making higher lows and higher highs on the LQD. Can't really say that about the TLT. So maybe we're just in a sideways choppy pattern here on the TLT, and we'll see which way it kind of goes. It is holding this nice little uptrend that we kind of got coming in through here on the lows, but need to see it get above that June high there on the TLT. All right, take a quick look at the IYT, the Transportation ETF, and transports this past week did have one big earnings, UPS, and it wasn't good. It was not good. So it held this 64 line, but I'd be curious to see if that does hold. Obviously, we had that very strong run, but it seems like it's going to come back down through all that support. And if it keeps doing it, especially with that huge upper wick that it did throw on Thursday, I think the LYT might be going lower, which is not really good for the economy if transports aren't really a part of economic activity. All right, the RSP, the equal weight SP 500, looking pretty good. Obviously, we had that nice little move there going into the middle part of July. Nice little pullback there for about 5 days. Bouncing off the 10 and 20, mostly off that 20, kind of bounced there on the 20 there Wednesday, Thursday. Looking pretty good. I would have liked to have seen it kind of come into these highs that we had right there around 166, but it didn't happen, you know. You always got to have your own game plan. Looking pretty good, though. I dig it. I would still rather be more exposed to the stocks, not big tech. So any kind of allocations that are not heavily weighted to big tech, that's where I would rather be. The DIA, Dow Jones Industrial Average, this also had a pretty nice pullback at the end of last week going into this week, and then we had a nice little bounce to end the week. So I would say it looks pretty good. I'd imagine the weekly looks pretty good. Yeah, nice little upper wick last week, nice little lower wick this week. The weekly says we go higher. How's the RSP look on the weekly? RSP looks pretty good there on a weekly. I mean, I don't see how these two don't go higher just from how they look on the weeklies, but it doesn't always have to work that way, I guess. But to me, they should go higher. IWM Russell 2000 ETF. Yeah, very strong move as we go into the middle part of July. Nice little pullback. Consolidation without as much of a deep pullback here. And I dig it, man. I really do. I think I'm starting to dig it a little bit more. I just think it's going to be a pretty aggressive run. Bullish. And I think there's a lot of capital that could probably still come out of big tech. And, you know, a lot of these smaller cap stocks, they can really, really move with how much capital could come out of big tech. The Qs. Yeah, there's a pretty stark difference, right? It's a pretty stark difference between the 3 previous ETFs we were looking at and the Qs. I mean, that is a pretty strong sell down there over the past like 2.5 weeks. And yeah, we got right down to that 100 moving average yesterday on Thursday. Nice little gap up, little doji action there on a gap up. I would imagine we probably do bounce bullish before we go lower. And if we just kind of can go sideways in here for maybe a couple days and then just pop bullish, end at like the session highs at the end of the day, as like right at close, to me, I would expect like the next day we kind of just open down and just trade lower. That's what I'll be looking for. If we do that, if we just kind of more choppy than anything, but then we have like a late day push, end at like the high of the day at the close on a strong push higher, maybe even get through the 10 and 20 moving averages. Not to say that this happens this next week, but maybe here over the next 2 weeks. I would want to be bearish on that. I think that would be a pretty good bearish play if that was to happen. SPY. Yep. Looking somewhat decent here. We do have a pretty good move down to that 100 moving average still, but you know, there's quite a bit of capital. Obviously, we know coming out of big tech here recently, but it's still been going into RSP, and this is one reason why, you know, a couple of weeks back when I kind of changed the thumbnail to sell, it was kind of like a tough one, right? Because it's like, money can come out of tech and just go into all the other stocks in the S&P 500, which is why the RSP is doing so well. And that's what the tough part is, right? Does money leave big tech and go into areas of investment outside of the S&P 500, which, you know, could be the IWM? And I'd say we've kind of seen a little bit of both. The RSP obviously is doing pretty good, There's a lot of things that are hugely underweighted in the RSP, and same thing for the IWM. So, but it's going to be really difficult if the Qs continue to sell off. I mean, big tech continues to sell off. That it's going to be really tough for the S&P 500 to not go in the same direction as the Qs. And since we have big tech earnings coming up this next week, I don't really know about being aggressively bearish. I mean, these are some of the most profitable, richest cash flow companies. I mean, they print money. They're basically like the Federal Reserve to themselves. But I would just be patient kind of this week. We're also going to get the FOMC meeting on Wednesday, so just be aware that we'll get interest rate decision, which most likely will be a hold, and then maybe going into the close on maybe Thursday. Maybe you start to look for a possibility of a bearish trade. Maybe close on Wednesday, maybe close on Thursday. So that's about all I got. I think AI is going to be a great piece of technology, but I think people are not realizing how expensive it is about to get. Alpha Hunters, have a great weekend. Take care.